Morning, Steve Free in Chicago with the morning grain comments. Overnight, soybean prices continue to trade higher. Soybean oil, soybean meal also higher. Corn's up a little bit, but off session highs. Wheat right now is trading mixed with market trading off session highs. I think there might be a little profit taking going on in the corn and wheat in front of the USDA export sales numbers and also going into the weekend. I think the first thing that we're looking at as far as beans are concerned is that we continue to see strong demand in the crush domestically and crushers bidding up for soybeans. It's tightening up the supply. Also, same thing in corn with the export outlook suggesting that the U.S. Balance sheet is tightening up and ethanol demand is improving. And yesterday we actually saw the market led by new buying coming in, the new crop contracts, November beans and December corn. This new buying hasn't been around since 2010, and I think they're focused on a less than ideal summer weather pattern that could push prices higher. We still have Reddit out there talking on Twitter about $20 beans, $14 wheat, and $12 corn. From a weather standpoint, right now it looks like over the next 7 days, rains will be across parts of Missouri, the Ohio River area, and Delta. There might be a few showers in Montana, western South Dakota, eastern Nebraska, also Iowa, northern Illinois, and Indiana. 6 to 10 day basically is calling for cooler temps and mostly normal rains. The 8 to 14 day warms up the northern plains and dries it out, but the Midwest should be okay. There are a few people that would like to short this market because of the mostly favorable start to the U.S. Crop season, and that Europe has improved and the Black Sea basically is okay. There is some concern in parts of eastern Russia and the Baltic areas that they're getting too much rain. It could be slowing planting down and early crop development there. Brazil's still dry. We saw one private group came out with a 95 million ton corn crop estimate for Brazil yesterday versus USDA's 109. We're hearing some people dropping it as low as 85 if it doesn't rain in May and there's no rain forecasted. That could really disrupt global trade of corn if there's 500 million less bushels of exports out of Brazil that has to be shifted to either Ukraine or the United States. May 12th, a lot of people will be watching pretty closely what the USDA does as far as old and new crop S&Ds. Some people fear that they could actually lower lower Europe corn imports, raise China, and not change the U.S. export number at all. They probably won't change the bean carryout because they believe 120 is the minimum pipeline. And then moving forward to 21-22, we'll see how they take the acres, trend yield, and try to come up with a carryout that's not bullish. So all those factors, the USDA, weather, money flow, and the tightness of the U.S. whole crop corn and soybean situation suggests the path of least resistance is still on the upside. So in general, we're looking at higher beans, oil seeds. Globally, vegetable oil prices are higher. We're looking at corn prices should trend higher. And then the wheat prices is mostly a follower. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.